President Trump has signed the big, beautiful bill, and here are my top 3 takeaways and how they relate to mortgage and real estate. The first is permanent mortgage insurance deductions. Now you get to write off conventional mortgage insurance, but also FHA, both in the form of the upfront MIP and the life of the loan monthly. Not only that, you also get to write off VA funding fees and USDA guarantees, huge opportunities, especially for first-time homebuyers. There were no changes to the mortgage interest deduction. Some might take that with a level of disappointment, hoping for an increase, but you could also look at that as still an opportunity that we did not see a decrease as some previously floated. Investors, the 1031 tax advantage did not change. Again, some previously reported that the bill was going to do away with the 1031 exchange tax deferment for selling like-by-like properties, and there is nothing that changes the 1031 as it currently exists. As a bonus, another thing that I noticed was no new federal funding for a federal down payment assistance program. While some may take this as a negative, looking for more opportunities for first-time buyers, I would say that I actually find this as a positive. Number one, we have enough by way of local and state programs, and what this does is avoid confusion for home buyers and resources that should be allocated in other areas. Current mortgage holders, listen up and beware. As mortgage interest rates start their decline, the increase for the mortgage bad guys and their solicitations will increase. There are no mortgage companies that are ever partnered or affiliated with any government agency. There is not a preferred VA financing solution or FHA streamline partners with HUD. If a lender is promising you a massive monthly payment reduction, make sure that it is accurate. I recently saw one where the interest rate was only slightly lower, but the monthly payment saw a massive decrease. Why? Well, the taxes and insurance, which already exist and you know what those are, were drastically reduced. No, their mortgage company is not lowering your property taxes or your existing homeowner's insurance. Beware of the skip a payment promise. You will pay interest, whether on your old or your new loan, every day that you have a loan. Skipping a mortgage payment is not a benefit or a reason that you should refinance. Your interest rate on that offer is not locked until the loan estimate says that it is locked. Far too often, I am seeing lenders promise upfront for an interest rate that does not exist at the time they promise it, only to find out that later that interest rate is higher or the cost to achieve that interest rate has increased to the point where refinancing is no longer beneficial. For other refinancing tips or scams that servicers or other companies may be throwing out there, reach out and I'm happy to look at any current offer that you have and give you my perspective. VA mortgage volume is up 45% in 2025 compared to the same period in 2024. And which vets are leading the way? It is the youngest set of buyers, the Gen Zers. The Gen Zers now make up 12% of all VA mortgage volume, which is triple the amount in just the last 3 years. Overall, millennials still dominate VA mortgage volume with a 48% share. Why the sudden increase? Well, we could look to a more balanced market in terms of buyers and available inventory, but also better education and knowledge around the benefits of the VA loan program. Agents, stop feeding into the narrative that a VA home loan is worse for your seller or more complicated process to complete. Buyers need every advantage in today's market to tackle their affordability challenges, and the smart ones are utilizing their resources and benefits of the VA home loan.